What do you need improvement in?
Just want to go through and win.
What is the purpose of overthinking? Taking care of your loved one. That's how you can increase your sales.
Hello, everybody. This is Faris.
And this is Faris Flournoy, and welcome to another episode of Conversations with the Homecare Guyz.
Man. Caleb, we have something amazing going on today, brother.
Yes. We have a special treat. We have not only our friend, but the insurance expert, Joe Foreman, is in the house.
Yeah,
What's up,
what's
Joe?
Going on, world? What's going on, world? Glad to be here. Glad to be a part of the show. I've been anxious to be a part of this for some time now, and just to see how far these two have come in such a short period of time has really done something to me to get me fired up.
Exactly. We're excited to have you on the show, Joe. Faris, I know you're excited. You've been knowing Joe for quite a long time, right?
Man, Joe and I, we know each other from school, man. Like, man, it's been high school days, man. Like, we seen each other grow, Joe.
Absolutely.
We seen the best of each other. We seen the growth of each other as well, and it's just so amazing to just have you on the show, man, to celebrate you and the success you have, man. And I'm just excited about just kind of delving into our conversation, brother.
Yeah.
See, the crazy part about this whole conversation is I've been watching them more than they've been watching me. and I don't take this relationship lightly because you know, you have certain people that you're attached to that you can call.
Mm-hmm.
They won't answer.
Uh-huh.
You have certain people you're attached to that you can call that will answer.
Mm-hmm.
Right.
And every single time I call, whether it's a big problem, a little problem, these two always answer the call.
Exactly.
And see, there's only so many people that can tell me to sit my butt down, shut up, and focus on what I need to do in order to get my mind back on track.
Exactly.
So, you know, this is like amazing for me to just be in your presence. And
well, we want to keep this conversation here, man. So we're excited about it. Well, Joe, listen, just tell us about yourself. Tell us how you got started in the insurance business, or tell us just about your life. That's what we want to hear. We want to know your story.
Single parent household.
Yeah.
You know, grew up in West End Projects.
Yeah.
Which is maybe less than 8 minutes from here.
Correct. Yep.
Okay. I don't think I ever really had the chance to see my mother struggle. I didn't learn about struggling until I got older and like, okay, well, mama, why can't I get some Jordans like my friends?
Exactly.
Right.
Why can't I get a necklace like this person? Or why do we always have to wait for special occasions to get certain things? You know, and growing up, my dad's mother, I love my grandmother to death. She was always in my life.
Wow.
I think she wanted to make up for what he didn't put into me.
Yes.
And my Aunt Carolyn, my Aunt Lisa as well. And my mother and my sister have always been that, I guess, that bridge to kind of keep me mentally in the game.
Yes.
Right.
But growing up, I was into sports. I love playing football.
But Joe was a good football player too. Ball and Braves, shout out.
I feel like I was okay because when you're playing beside a guy like Leroy Hill, it's like there's you and there's Jesus.
Wait. So he went professional. Leroy, how many years did Leroy go professional?
I want to say 8 because he made enough time to be vested where he get, you know, his residuals. But playing next to him is like you have no choice but to want to do better and get better in your craft. And then following you guys from way back to see where you are now has really become full circle. And I'm kind of saying that because we all, I feel like, was at the same point.
Yeah.
Yes.
Where we were, we had we didn't have enough. We had more money than we had money, you know, and I wanted to somewhat get into a field where I can change my narrative. Been married, divorced, and being a divorcee is like, that can be something that can really hold you back.
Yeah.
Right.
It can be something that can really mentally weigh you down.
Correct.
And you feel like people are pointing at you and laughing at you and all these different things. And then you mess around and get a phone call or a video text from Faris that tells you, I literally got a video text from Faris, like a facial, like just encouraging me.
Nice.
To get me back in the game. And I don't know if he was busy that day or what. I don't know what made you do that. But people don't know what you're going through But when you find out the people that really care,
right,
but they don't really try to get in your business, that what made me like connect to you guys even more. And part of me saying this is like I'm giving y'all flowers, but I'm also telling my story at the same time.
Right. Take your time, man.
Because you've encouraged me like so much.
Wow.
And it's very rare that I know your audience is national, and it's very seldom that Black men get a chance to give each other the flowers while they're still here.
Wow.
And this podcast at some point, and I feel like right now it already is on a national stage, will allow other Black men and other minorities or whatnot to be able to just say, okay, let me give this person their flowers while I still can.
Well, listen, we're gonna receive all of that, man. We're gonna receive all of this national broadcast. But listen, I want you to tell us. So tell us how you got into the insurance business. I want to know that.
I got into insurance because I had a relative, grandparent, that I was a little kid, would always say, if anything ever happened to me, baby, y'all gonna be straight. Y'all gonna be taken care of. Y'all ain't got to worry about anything. Well, I remember this guy. I can't name the company for liability reasons.
Yep.
What they did was they would come around once a month and they would knock on the door. My grandmother would bring them that envelope. Okay. With that envelope, it was maybe maybe a few dollars, some change, whatever. They call it what we call a nickel and dime policy, or an industrial policy. Okay.
Okay.
Those were policies that were written for us. I'm not gonna say by us, but for us specifically. And that's how we were taught to leave enough to just put us in the ground.
Wow.
Well, what my grandmother thought she had wasn't what she had.
Wow.
Paid on a plan for 20 plus years.
What did she have?
$3,000.
Oh, wow.
Oh, my brother, look, hold up. Look, I'm going to jump right in because my grandmother had the same policy. I remember, can you remember grandma? She used to have a little policy holder right on the door.
Yep.
And every month someone would come in. I know the name of the company. I'm not going to go through and say it. But the policy holder right on the little door. Every time I come in and get the little few dollars. And she lived.
She used to pay that religiously. Every month. Wow.
And that's what they did.
Wow.
But they didn't know any better. Like when people say, when you know better, you do better. I really don't believe that statement whatsoever. Why don't I believe that? One thing that made me not believe that statement, when you know better, you do better, excuse me, is because the internet is out there.
Yep.
The information is available.
Right.
You don't even have to call an expert. You can YouTube it.
Yep. Right.
You can Instagram it.
That's true.
You can Facebook it.
Yeah.
Yeah.
You can find out anything and everything you want to know about pretty much any industry.
Right.
But you're going to have to go to school to be a doctor.
Right.
You got to believe that.
Exactly.
So when I say that, when you know better, you do better, think about this. My great-great-great-grandparents had maybe a just enough. And then my great-great-grandparents had a just enough, and they probably got that plan from the same person that helped my great-great-grandparents.
Right.
Bring it on down to my grandmother and my great-grandmother. I have to be inclined to believe that they only had just enough. Okay. Why do I feel this way? Other races and other ethnic groups, they think of insurance in terms of, I'm going to protect my legacy.
Creating wealth.
I'm going to protect my last name. I'm not going to allow my family to lose these 11 acres or these 20 acres or these 19 properties, because when you think about it, there is something called an inheritance tax.
Correct.
Right.
So even if they get enough of a plan to take care of the estate taxes, y'all call that estate taxes. So it's like I'm out here I'm giving people the information basically for free.
Right.
And it's like, I'm just going to keep what I got, and I'm okay with that. Because if you're not at least open, and see the reason why you two are expanding so well, because you're open to new ideas. Just got back from Texas.
Right.
You're open to new ideas.
I'm going to ask you a question, because I think that's a really good segue into, like, Are you seeing nowadays, especially access to information is already there. Everyone access is already here. Are you seeing people still willfully not choosing to make a decision on to set themselves up or their family up for success in the future?
Yes.
Why do you think that is?
The reason being is because it's like it's a chain that they're attached to. What I mean by that is, ain't nobody leave me nothing.
Oh, wow.
Why am I gonna leave you something?
Dude, actually, I remember hearing about a certain person that actually said that. I'm not leaving my children anything because nobody left me nothing. And that is a very poverty-stricken mindset. And because this person worked several years, retired, was very successful at what they did. But that mindset right there is a poverty mindset, because what it does is it sets the reset button, I feel, on life, because we never know how life is going to turn out for our children or our children's children.
Yes.
And at least to be able to get them on another level. That's what life is about.
Yeah, and I think also, the Bible says a good man leaveth an inheritance for his children. And so come on, give me some pound. And so right now, I think that especially in our community, we, like you said, we're only exposed to certain to so much. And when we are getting when we're getting the information, we move slow, and then we move to a point where that we don't think about the next generation. We don't think about the lives that are affected afterwards. And so is that one of the purposes of life insurance? Is like to create wealth and to also as a legacy, like you mentioned earlier, a legacy for your children's children. Okay. Yeah, is that something? Yeah.
Not only is it meant to protect your legacy and to leave an inheritance for your children's children, it's also meant for if something happens to you while you're still alive.
Okay.
Critical illness, or chronic illness, or terminal illness.
Right.
You have access to your plan while you're still living.
Well, why don't you tell us about that?
So
go into deeper.
Critical illness, terminal illnesses, and chronic illnesses.
Critical, terminal, chronic.
Okay.
Critical and chronic are pretty much one and the same. They're basically related to the blood system, heart, and all vital organs.
Yeah, like a stroke or heart attack, stuff like that.
Terminal illness, be cancerous, may give you 6 months to live, a year to live, whatever the case may be. Now, if you happen to go into that particular protocol where you have to enforce your living benefits, these people or individuals will have the opportunity to get healthcare services from prime care, from whatever care that they choose to go with.
Correct. Right.
But just because you're sick, just because you can't work, you still need what coming in?
You need money. You need money. Yeah.
Okay. Now you still need money to pay for those services. Where are you going to get the money from?
You can't work.
So and when I speak on this particular part of the plan, is really like, to me, near and dear, because I've had clients that had to exercise their living benefits.
Wow.
I've had clients that got up to if they had a $300,000-$400,000 plan, they was able to get $150,000-$200,000 while they're still alive.
Wow.
And see, you can hear the passion in my, because like it's so real to me. To be able to help a family today, and next week something happened to that family member, they're no longer with us, and because I did the right thing, or because they did the right thing for their family, they were still able to leave something in place.
Yes.
That's amazing.
Yes.
I did a plan last year, and I spoke about it on my live the last week of August. They passed away the first week of September.
Wow.
The wife, and I do my follow-up.
Yeah.
Wife said, well, because when my follow-up, I check on everybody. Wife said, well, my husband passed, da-da-da-da. She wasn't emotional because he lived a full life.
Correct.
Okay. And he left her in every time I had this statement, Inky Johnson had this statement, I'm going to leave this thing better than I found it. I really feel like he's left his wife better than he found her.
Wow.
Okay. So I said, well, you need help filling out the death claim? Boom, boom, boom. She said, I already took care of all that.
Wow.
It's like she knew her husband lived a full life.
Right.
She knew her husband put her in a real good position. She knew there was still a balance left on the mortgage. Guess what? Mortgage taken care of.
Yes, yes.
She ain't got to worry about some things. But but this thing called living benefits can really, really, really be a blessing in disguise for many of the people that are watching, listening, or YouTubing your show.
And Joe, I think a lot of times people, they, because I've had insurance since I was 18. That's one thing my mom always told us, like, initially get that, because you just never, and I had it even before I had a family, because I knew I wanted to be responsible for myself as well if anything were to happen. I think a lot of times as life happens, situations happen, when are the most ideal times for people to reevaluate their self when it comes to insurance as well?
Question.
Okay.
Yeah.
My first suggestion when evaluating your situation would be to not look at your life insurance plan as a bill. Do not look at it as a bill. Okay. Looking at it as a bill is going to be a burden every single month. For me, my true heart desire is for most of my clients, if they get a income tax, a refund, go ahead and pay it up once a year.
That's smart.
You got free money coming in.
That's actually smart. I like that.
So if your plan costs you $800 a year, $900 a year, $1,000, whatever the amount may be, pay it up.
Wow.
For the whole year. Income tax roll back around, do the same thing. But you have to really, truly, because most people will look at it as a bill. I just got to be honest. If it is a bill, you have to really look at the bigger picture. What can I afford not to have? See, for me, I tell Keandra, who's my fiance, baby, you pay that life insurance before you pay this house note.
Right. You know what? It's actually that important.
That makes sense.
It's that important. You have to think about your life and what you're going to leave, because you can be paying your car note, you can be paying your house note, and then something happens to you. They're going to be a foreclosed house and a foreclosed car or repoed car. And so life insurance should be the best. That should be the number one priority. And so I like how you said, don't look at it as a bill, but look at it as something that's so important that you have to pay first.
Absolutely.
I want to dive into this real quick. I want to dive into the many aspects. Well, let me dive into that later, but let's talk about this. What is the income, or what is like the amount of life insurance someone should purchase? So say if I was a teacher, I was making probably around $40,000 to $50,000 a year. What is the policy that you think that I would need? Or if I was a doctor making, let's do a teacher and probably a physician or something like that, doctor making $150,000 a year. So what do you think is like the face amounts?
All right. A doctor, I'm just going to throw some ages out there. Most doctors, when they're going to practice or whatever the case may be, are going to be early 30s, maybe, or maybe mid 30s. Most teachers, mid 20s. So let's just say each of those professions, they have at least one child.
Okay.
May not be married, may be married.
Correct.
Let's just say one child. If they want a child. Well, let's say if they don't want children, let's say they at least got a dog.
Everybody got a dog.
People gonna take
A goldfish or something, right?
I
think we all want to be Oprah's dog.
I want to leave this money to so and so because I know they're gonna take care of my dog.
Exactly.
That's what she said.
Wow.
So let's just kind of look at that scenario. Okay, teacher making 40,000, doctor making
200.
200.
Okay.
As a teacher, the going standard in this profession is at least 10 times your annual income.
Wow. Okay.
So 40,000, you need at least 400. Okay. If it's a doctor making 200,000, then the numbers are the numbers.
Exactly.
I would at least go with $1 million, $2 million,
correct,
at least.
Okay.
Because because most people that are making $40,000, they have a $40,000 lifestyle. Which means all 40,000 is already spent before they even get it.
Okay. Right.
Doctor on the other end, and I'm just being honest, their money is already spent too.
Correct.
Student loans and house and
so I would recommend at least 10 times your annual income. Because if you have a small child, let's just say you don't put anything and no annuity, no investment, no trust or anything. Let's just say you just put in your savings account, which is the worst thing you can do.
Oh yeah.
Right.
You put in your savings account. At least that money can be used $40,000 a year for at least 10 years.
That makes sense.
You got at least 10 years before that money runs out to take care of, that child. Not saying the child is going to use all of that money per year, but whoever is taking care of the child or whomever, they need funds to take care of their household as well too, because they've added another responsibility.
Life still goes on.
There you go.
Exactly.
And so I would recommend at least 10 times your annual income, and two, if you can start somewhere and you can always go up.
Yes.
Right.
Okay.
Yes.
So as the years go by, you're gonna make more money.
Correct.
Right.
So if you're gonna make more money, okay, well, I think I can afford $20 more a month. Joe,
Exactly.
can you come out? Can you help me? Or can you do it over the phone? Or
Exactly.
Can you do it through Zoom? I can do it either way. But the bottom line is, I want to make sure you got something in place to take care of your family.
Well, I want to ask you one.
Right.
I want to ask you another question too about the different types of insurance, because I think a lot of people, a lot of our viewers, they hear about insurance and they think about insurance is so expensive and oh my goodness, this is going to really take a lot of my funds. Like, can you elaborate a little bit on like the different types of insurance real quickly for us?
That's one of the I would say the number one question that I get every time I get in front of a customer or over the phone or through Zoom. Joe, people have a general idea of what life insurance is. Like for me, I know a doctor going to check my temperature. They're going to check my heart. Well, not the doctor's not going to do that. Their assistants will.
Correct.
So I kind of know the process going into the facility, what's going to happen. But I'm not going to tell a doctor how to do his given job, which is what he loves to do, his passion. So when it comes to insurance, I'll lay it out on the table, but not in a way where it confuses the client. Number one, the first type of life insurance that I absolutely love, okay, is a cashback term policy. Okay. Why would someone use a cashback term? Guess?
Money
I guess you get cash back. Is that the answer?
That's part of the reason. Okay. Now,
and protection.
Some people would get a cashback term plan if they qualify because they have a mortgage.
Okay.
Okay. So we're going to protect this mortgage. Just say, I'll usually do it for, if they got a 30-year mortgage, I'll do that plan for 25 years. Okay. I'm going to show them how to pay off their house 5 years early. Okay. Now, with that cashback term, what's going to happen is you're going to get a set premium. It's going to be level for at least 25 years. Okay. At the end of that term, all the money you've paid in, you get all that money back.
Oh, wow.
Okay. Now, here's how you're going to pay off
Sign
your
me up
home.
for a cashback.
Here's how you're going to pay off your home in 5 years. You're going to eliminate a whole lot of interest, whatever's in your escrow, and whatever, well, escrow going to cover a whole lot of stuff, but escrow and a whole lot of interest is going to be eliminated because now you're just going to be like, all right, y'all, what I owe on this house? So you can go on your app on your phone, find out what you owe, right? So the amount of money that you'll get back as far as your cashback term plan is concerned, you'll more than likely have about $10,000 left over after you pay off your home when you get your money back from your cashback term.
Wow.
What can you do with those $10,000 at, let's just say, 55, 60 years old?
A lot.
At that age, you can probably do a whole lot with it, or you can give it to a loved one or whatever the case may be. But that's why I love cashback terms. Now, if you have a term plan with a carrier that doesn't offer cashback term, I would suggest that you call that person and ask them, do they offer cashback term, even if you don't have a mortgage? Because I get this question all the time. What happens to my money when my term is up? Those particular carriers will say, well, you just get another plan. What? Now, again, I don't knock anybody else, but if you can get money back at the end of your term, by all means, try to get that plan.
Oh, yeah.
Second plan that I love, call it Index Universal Life Plan. Okay. It has two particular elements to it, if you will. has an accumulation account that's vested into the stock market day one, and it has a face value amount, okay, which is level.
Correct.
Okay.
Doesn't expire till you turn 120 years old. The likelihood of you hitting 120 years old.
It's Moses.
Unless you're Moses and Abraham. How old? 100.
Exactly.
Okay then. So you
I want to get to 100.
We ain't gonna put it
exercise, gotta exercise and eat right every day.
Now, with that IUL, guess what? Your premiums are vested day one. And your money start accumulating over time in your accumulation account. So the money that's building in your accumulation account, guess what it does? It grows. If you decide to take that money out for any particular reason, don't need any reasons whatsoever, there's no tax penalties. There's no penalty on your money.
Oh, wow.
Unlike a 401k, if you're not at a certain age and you decide to pull that money out, you're going to get a penalty and you're going to have to pay taxes.
Yeah, it's like 59 and a half.
There you go.
I remember that. Yeah. Okay.
So depending on how your IUL is set up, you can really grow your money extremely fast in that IUL. A lot of people outside of the minority race, us, they participate in IULs because they want a surefire way to grow that money and be able to put their hands on it at the same time if they need to.
Do you know of anybody that people would know of that uses IULs like any?
Absolutely. If you're on YouTube, if you're on whatever medium you can get on, you're gonna always see people like Waka Flocka talking about it. You're gonna see what's the guy in Rashad and
Earn Your Leisure
talking about it. You're gonna hear people talking about they coined it infinity banking, which people are saying you can be your own banker through life insurance. Okay,
got it.
Which you can. You could put money in and you can pull it out. You can grow interest. You can pull it again.
So it's like a savings, more like a savings, like you're saving
with a higher interest rate that doesn't lose money.
Is it a guaranteed interest rate?
Absolutely.
Oh, wow. Okay.
Now, what I mean by guaranteed interest rate, over the last 30 years, some of my IULs have been averaging around 7%, 8%. Some have been averaging around 5 or 6. Okay. Now, if it goes up 20%, your accumulation account will participate. If it goes down 20%, your money stays level.
Oh, wow.
You don't lose your money at all. No way you can lose your money. So this, to me, an IUL gives you two things that I look forward to. If you're putting your money in like you need to, and let's say you want to be a Joshua and a Caleb and a Faris, but you don't know where to get the resources from to start that business.
Right.
But you might have $50,000, $60,000 sitting in your accumulation account in your IUL, and it may only cost you $30,000 to do what you need to do to get the business off the ground. But you got another $30,000 that's going to just be sitting in the bank as reserves. So you basically funded your own business without having to go to a bank, ladies and gentlemen.
Wow.
Okay. So this is why having an open mind, like I said earlier, is so beneficial, because if you're going to have if you're going to pay for life insurance, why not try to make money while you're sleeping with your life insurance? Because everybody's on this whole crypto kick. They're on stocks, they're on
options and everything.
They're on all these different platforms. But it's like, okay, you can get into crypto, you can get in all these different investments, but let life insurance be your foundation.
That's the basics,
and that's one thing I think keeping the first things first is so important, because I think a lot of times we spend so much time, especially our generation, our 30-something, we'll research, and we'll spend our whole 30 in our 30s researching. I'm gonna, and all that time has passed by.
Right.
Before we end this, I want to go through and actually kind of talk about our seniors and our disabled individuals. So like we have a lot of family members that are caring for their loved ones, and a lot of and our parents' generations, they're more private. They're not on Facebook and letting it all hang out. They're going through. They're very private. How would you recommend having a conversation with an aging parent about life insurance?
Gotcha. If you have quite a few siblings, maybe one Sunday, y'all just decide to have a family dinner, or you all just take mama out, maybe to a favorite restaurant. And don't be in a hurry.
Yeah.
Like you got to make time for these types of conversations because you just can't have them, especially if they're extremely private individuals.
Right.
I have 3 clients right now trying to figure out why mom and daddy didn't put a beneficiary on their bank account.
Wow.
That's one way. And this bank account not a life insurance product, but get your beneficiary straight.
Yes.
On your on their bank accounts. Okay.
Right.
That's one conversation I will have. 2, okay. Quite a few of the seniors that I get a chance to talk to have quite a few policies, and they may equal up to $15,000.
Wow.
And they may be paying $300-$400 a month, and they're on fixed income.
Wow. Do you see that often?
Every day.
Wow.
Where people in their 60s and 50s, 60s, 70s, they're paying $300 per month for these policies that were sold to them in the 1980s and 90s.
Yep.
And they're only $15,000.
Yep.
But they've been paying those premiums loyally.
Yep.
Loyal.
Which is not even enough to bury right now, especially in 2022.
That's amazing.
And so
and not amazing in a good way. It's crazy, actually.
And so the pivot is like, okay, so most people at that age, they don't even know where their policy is.
Oh, wow.
But you have to ask them, okay, because most of the time it's on automatic draft. Okay.
Right.
You got to kind of figure out a way to get a copy of their bank statement or get them to show you, okay, who is taking money out your account. Okay. Now, case in point, I got another senior right now that we're trying to rectify some issues with. She's been paying on her policy for 15 years. Okay. She's 82 years old.
Wow.
Okay. Gets a letter in the mail 2 weeks ago saying her policy had been canceled.
Oh my gosh.
Money still coming out her account from that said company.
Wow.
So either y'all gonna get this lady back all her money that she paid y'all, or we gonna get them folks up at the Department of Insurance to give y'all a phone call.
Exactly.
But that ain't what y'all want.
Wow.
So I didn't have to get involved too much because first of all, we want to try to work things out, civilized, and then we'll take it, that far.
Right.
So you got seniors that are being taken advantage of. You got children that are not asking the right questions and may not even care. But everybody want to know that somebody had life insurance when they passed.
Right.
Just be proactive. Have those conversations. Like they're not easy conversations, but they have to be had.
Yeah.
And in one surefire way, again, you can always get some information from people when you put food on their stomach.
Yeah.
Right.
So,
Right. That's always good.
Just put food on their stomach.
People just open up, huh?
There you go.
Exactly. And I like that. And because one thing we're going to do is, because I think we need to carry this conversation to the after the show as well. So, guys, hey, once we close this out, make sure you go through and tune into the after show. But, Joe, I want to go through, before we close this show out, I want to go through and allow you to give information about your company, how people can reach out to you, because I think this is a conversation that needs to be had.
Yes.
And I feel like you're the type of person that could even assist people that are in our shoes that need to talk to their parents. You can give them a step-by-step on how to have that conversation, or you may be even willing to get around the table with them to see how you can go through and actually assist them and their loved ones as well. Because, man, you've been helping out so many people, and you don't just only service Georgia, you service several other states as well.
Yes, that's a treat, right?
Yeah, so
to talk to a country millionaire out in Texas and get to talk to New Jersey folks, they all change.
Oh, man.
But I get a chance to just love on a whole lot of people. But one of the easiest ways you can reach out to me, I don't mind giving individuals my personal cell.
That's amazing. That's customer service right there.
470-779-9935. The reason I give my personal cell is because, one, I don't want you to feel like I'm better than you. I don't want you to feel like I'm just a regular person that sells life insurance or helps family with life insurance that I don't want to be reached after I serve you. Second way to reach me is Joe Foreman at ineedlifeinsurancenow.net. Okay. Joe Foreman at ineedlifeinsurancenow.net. Catch me on Instagram, Foreman _life _insurance _group. I may be changing that because my marketing lady says that name is too long. That's what we're gonna roll with. Okay. And like I said, just reach out to me. I have a website, but we're revamping it. My marketing lady also got on that.
It's good to have a marketing person.
But the website is ineedlifeinsurancenow.com.
Okay.
No, ineedlifeinsurancenow.net.
Gotcha.
So, but those are just quite a few ways that you can contact me, and I look forward to serving anybody in any 10 states, Texas. I can't even name them all.
It's so many states to name, man. Well, Joe, I want to say it has been a pleasure. We have enjoyed this conversation about protecting your families and protecting yourself with life insurance. And we're gonna go into the after show after this. But I want our audience to tune in every week on Tuesdays and Thursdays. We let out a new episode, conversation with the Homecare Guyz, and we're just excited about just bringing in industry experts to our table and to talk and discuss, things that can benefit you as well as our senior community. So, Faris, you take away on some other platforms that we're on so they can follow.
Again, guys, we just appreciate y'all tuning in. Just like Caleb said, find us on Apple, Spotify, YouTube, Facebook, Instagram. Go through, make sure you tag a friend, let them know, because this is a conversation that needs to be had as well. If not for yourself, for your mom, for your dad, or for your child. So if you're not thinking about yourself, think about your children.
Right.
So definitely make sure you tune in and catch us out in the after show, because I will encourage, if you are a mother, father, business owner, entrepreneur, check out the after show, because we're going to be asking some powerful questions there. All right. Thank you for tuning in. We'll see you next time.
Stay safe.